Good afternoon and welcome to the SHANTA Gold Limited Company Update Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged to be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand over to Eric Zurin, CEO from SHANTA Gold. Good afternoon.
Good afternoon, Zach, and thank you very much for having me on the program today. We have an interesting announcement out of our West Kenya project, which is one of three assets we have in the SHANTA Gold portfolio. We spent a lot of time last year working on our exploration properties at West Kenya. The time has come now to provide an update on what we've achieved and what we aim to achieve in 2022. I have a presentation today, and I'll take the audience through a few slides outlining some of those achievements and really setting out the story for why West Kenya, I think, is the part of the really exciting growth phase or component of the SHANTA Gold equity story overall. So without further ado, I'll start the presentation now. Thank you very much, and take you through it. Now, just as a reminder, on slide 2, we have 5 or 6 slides to go through today, so it won't be a long presentation. But just to remind you, SHANTA Gold has been operating in East Africa for 20 years. We are backed by some very large and established shareholders, predominantly out of London. The directors, including myself, have a meaningful interest in SHANTA. It's my single largest position in my own personal portfolio. So I have certainly like to put my money where my mouth is and be aligned with our fellow shareholders. Today, SHANTA's market cap is around about $130 million, about 100 million pounds. We have an excellent balance sheet position. So we're reporting net cash of 11 million at December 31st. And we pay a dividend. So we paid 2 individual dividend payments last year of totaling about 2.1% yield on today's share price. As I said, we've been operating in East Africa for a long time. We have a producing mine in Tanzania called the Niliwika Gold Mine. We'll soon have a second producing mine in Tanzania called the Singida Mine. That will take us over 100,000 ounces of gold production in less than 12 months, so in Q1 next year. And of course, we have the beautiful West Kenya project that we acquired in Kenya back in 2020 and have just completed our first full year of exploration. Collectively, we have about 3.5 million ounces of gold contained across our portfolio, and have been in production. This is our 9th year. Now, the highlights here on slide 3 is as follows. The West Kenya project that we acquired sits in, we think, a multi-million ounce gold region. We already know to the south in Tanzania, we have Barrick and AngloGold with their world-class mines. And this Lake Victoria region is an extension of what we have seen for the last 30 or 40 years in gold mining in Tanzania. And so when you talk to our geologists, they're convinced that the licenses I'm showing you today on this slide hold millions of ounces, I should say, and is a multi-million ounce package. Now, what gives them that conviction? Well, the first is that there hasn't been systematic exploration here for anything close to over 10 years. I mean, there's been, I would call it, large-scale exploration on these properties, which is now less than about 10 years at most. So there are more discoveries that will occur. I'm told that categorically by our geologists. And this area can be described as underexplored. Now, when you look at this map, you can also see numerous targets. All these little names here, they probably don't mean very much to you. They're typically names of towns that we've identified prospects around. And just last year, we went from 2 compliant resource deposits to now 4. So last year, when I would have made this presentation, we had the Isulu and Bushingala deposits. This is up in the Laranda region. And now today we've announced the Boombo compliant resource and also the Ramula compliant resource, which we announced a couple of weeks ago. We've also now doubled from 1 region to 2 regions. So we have the Laranda region and the Ramula region. And within each of those regions, you have numerous targets that are highly prospective and underexplored. So overall, we're in the right region. We have an excellent land holding. We are super excited by what we own, and we're showing real results. Now let's talk a bit about those results today. Slide 4. What did we announce today? Well, we've announced an increase overall on our resource holding. So we now have 1.55 million ounces of contained compliant gold resources across our property. So that's up 31% from this time last year. Now, at the ones of particular interest is Isulu and Bushingala, where we spent 85% of our money last year, around about $4 million of infill drilling. We have a total resource holding of 1.1 million ounces at 10.8 grams per ton. So not dissimilar to what it was this time last year. But the big but here is that 34% of those resources are now improved and upgraded into the indicated category. Now that basically means the following for the generalists out there. The resource that we declared a year ago, that was the historic resource, was drilled to a spacing of about 80 meters. So we put a hole down, drill hole, and you'd go 80 meters and you put another hole down and you would interpolate what was in between that 80 meters based on structures and estimated geology and trends and faults. Now, what we've done with the infill drilling, the $4 million that we spent, we narrowed that 80 meter spacing to about 40 meter spacing at Isulu and roughly about 30 meter spacing at Bushingala. Roughly, because it isn't a pure linear calculation. I mean, if we need more information in certain areas, we'll put another hole down. It might be 15 meter spacing. And if we don't need as much information in other places, we won't drill to as tight of spacing. But anyways, what that basically means is our confidence in those 34% of the total ounces, our confidence is much better than it is in an inferred ounce. What does it actually mean? Well, this is the 4th bullet on this slide, the indicated resources. These are the resources that are now drilled to 30 and 40 meter spacing, are up 221% versus the announcement we made about 6 months ago. So we now have 378,000 ounces at 11.7 grams per ton. This is, I challenge my peers to find as an exciting project as that with those kinds of eye-watering grades. I mean, you can find it in Canada, but you'll probably pay about 20 times more for it in terms of the value of the project. And so we think we're onto an absolute winner here at the West Kenya project, and we have full commitment from the communities and government to continue to spend. Now the story gets pretty interesting when you add in the oxides. So the oxides are the portion of resource from surface down to about 80 or 100 meters below surface, and this is what's called typically free dig. So when you look at the drill core that we've pulled out of the ground, it's very brittle. You don't need much or any blasting really at all. This is you basically can use excavators and extract the gold that way and the ore that way. So the oxides in the indicated category, 67,000 ounces at 15.8 grams per ton. I mean, absolutely amazing gold grades. And remember, gold grades typically correlate with profitability, and the oxides will be used in the early part of the mine plan to help pay for future capex. So very encouraging. Now, the final point I want to make on this slide is that the overall target for 2022 one of our targets at least, is to add another 700,000 ounces to the indicated category. So that would be 400,000 at the Sulu and Bushingala deposits and about 300,000 at the Ramula deposit. That's one of our KPIs. Others would be to expand the resource and bring new targets into compliant deposits. So overall, what we're trying to ultimately solve for is we want to build a mine. I mean, that's the whole point of why we acquired this project from Barrick. Is this suits our skill set very well. It's a perfect size for us, and it's shares a lot of there's a lot of complementary aspects to what we're already doing in Tanzania. We want to build a mine, and we're infill drilling to prove that a mine can be economic. Now on to slide 5 of the presentation, and what I'd like to take you through on this slide is a bit more detail in this Sulu and Bushingala deposits, the areas where we spent a disproportionate amount of the money last year, and tell you what we did with that money and why it was money well spent. The first point I make is we drilled about 27,000 meters at Sulu and Bushingala doing this so-called infill drilling, and it converted at about 100% conversion rate from inferred to indicated, 378,000 ounces at 11.7 grams. So you can see most of that, about 2/3 of that would be in Sulu, and maybe about 30% would be in Bushingala, the 109,000 versus the 269. But do cast your eye on those grades at Sulu, absolutely phenomenal. Another thing that we achieved last year is we've confirmed the mineralization is well constrained within the geological features. What does that mean? Those are a lot of heavy words, and they sound quite technical. Well, in short, the resource model, so what we're modeling, what the computers and our geologists are modeling in terms of how many ounces there, we would call that robust. Why is it robust? Well, because when you look at the sensitivity to the cutoff grade, so when we look at taking lower grade areas of the resource, the number of ounces doesn't really change that much. This is detail that's in the RNS. That gives us ultimately flexibility in dealing with different mining options in the future, and it gives us confidence that what we've estimated in the resource model is actually pretty stable. What you wouldn't want to see is a resource model with huge variations in number of ounces as you sensitize the cutoff grade, because it basically means you're not quite sure what's down there, in short. And so you want to see that quite stable. As I said already, our 2022 targets to double the indicated ounces at Sulu and Bushingala from 378 to 750 to 800,000 ounces. And so Yuri and the team are hard at work on that, and have been doing so for the last 3 months in 2022. And we've already noted in the RNS that we've seen some spectacular visible gold come out of that drilling in the last few weeks. So that gold now is, those drill cores are at the lab, and we should have an update out in April or May. And then finally, as I said already, the oxides, this is the portion that's closest to surface, down 0 to 100 meters, is in total 146,000 ounces of oxides at 9.4 grams per ton. That includes indicated and inferred. And you can see here at the Sulu, on the left-hand side of the Sulu deposit, there isn't anything at surface. And that's because we just simply weren't confident enough. We need to do a little bit more drilling to prove that those oxides can form into the indicated category. So we're being, we think, conservative in that regard. Now, on to this new deposit called Ramula. What's this Ramula all about? Where did it come from? What's the background? What do we got? Ramula is a deposit about 35 kilometers west of Sulu and Bushingala. I'll go back to this first slide here. So this is in what we're calling the Ramula region, and Ramula is sort of in the top right-hand side of this, is in this Ramula region. And you can see here, there's a number of red stars around. Those are different targets that we think could be part of a collection of deposits that would ultimately feed a Ramula regional processing center. So let's start with the first deposit that we know. This is the Ramula deposit. What we've done here is we've shown an illustrative pit shell, and Ramula is quite different from Isulu and Bushengal in a few ways. The first is that it's sub-horizontal. Again, another fancy technical word or words. Basically means it's below surface, so it's sub, and the mineralization is in these horizontal pancake-like formations. So you can see here these, left to right golden areas. There's about 19 or 20 of these mineralized zones, and it's sort of like a stack of pancakes. You can picture that on a plate. And so as we drill a hole through the stack of mineralized zones, we effectively get every hole we go down, we get up to 20 different intersections of gold in one hole, of ore in one hole. So it's quite efficient from a drilling perspective. What that's allowed us to do is we drilled, I think it was about 15 holes last year. We didn't spend a lot of money at all, literally a couple $100,000. And we were able to combine that with some historical drilling that the previous owner had done to declare a 434,000 ounce inferred resource at Ramula. So again, this could be the first deposit that actually goes into production. It could be the first one that justifies a Ramula processing center. It could be the first of many. It gives us options, and it's more ounces. I mean, it shows that this area is prospective. What do we like about Ramula here? Well, first is that it's different. It's sub-horizontal, and it would be likely extracted by conventional open pit mechanized mining on a low strip. And then when you're on surface at Ramula, I was there a couple of weeks ago again, and you can see on either side, it's like a tabletop formation. On either side, you have these two depressions, sort of like mini valleys that fall away, which means Ramula could be extracted with relatively low strip in our models. It confirms a second mining camp at the West Kenya project, as I said, and we believe that through drilling about 15 more holes this year at Ramula, we'll be able to convert at least 300,000 ounces into the indicated category again, which would be very significant in terms of one step closer to a mining operation at Ramula. So all things look pretty interesting in the Ramula region. Now I'll just cover a few other points before we get on to some of the expected news flow items and share price catalysts. Today, we also announced an independently modeled resource at the Boombo target. Now, this is it's a polymetallic zone, a polymetallic deposit. We've had it upgraded to a JORC 2012 compliant resource. And if you look at the press release, I mean, it certainly looks very high grade. I mean, there's zinc and copper grades. I think the copper is, from memory, around 1.5%. Zinc is higher than that. It's relatively small, so we have to figure out what we do with it, how we piece this into the overall West Kenya strategy. But again, it points to the prospectivity of the area, and of course, there's gold credits and some silver credits in there as well. So, a bit of nice news upside for us with Boombo. It hasn't been tested much at all. The whole system is about a 500-meter strike, and it needs more work. But again, it's one of the many targets we'll be working on throughout the year. Now, a bit more on what we want to achieve. As I said, for 2022, some of our KPIs that we've set ourselves up with. We want to spend about 80% of our time upgrading the resources further into indicated. And the reason for that is because we're getting on with the feasibility study work starting in May this year. And as I said, we want to build a mine. That's the whole point of acquiring this project for us, is to build a mine. So about 80% of our work will be in upgrading the resources, 20% will be looking at possibly adding new resources from other targets. Within that 80%, as I said already, we want to target an initial 700,000 ounces going into the indicated. We're going to be doing some more expansion and infill drilling at Ramula. And then, of course, in this other bucket, the 20% of new resources, we're out targeting the, I wouldn't call it blue sky, but certainly the upside potential. And one of those areas, I'll give you an example, is the Musumbi target. This is in the Ramula region. This is 10 kilometers across from east to west. And we've just completed our soil sampling exercise there. It looks like a very large tonnage, low-grade system with huge bulk potential and rich centers. And what our soil sampling has proven is that geologically, this system actually exists. This isn't just an idea. There is a real system there. And so we're thinking about how we best move that type of target forward, possibly how we think about allocating capital or getting other capital from other people, potentially partners or the whatnot to move that forward. But all signs point to a pretty interesting target for more work. Now, just a bit on news flow and share price catalysts on this slide here. Today we've announced the West Kenya resource update. In a few days, we'll have our inaugural sustainability report published. It's a great piece of work. We've spent the last 9 months working on that across all departments and all assets. So all three of our assets or our projects have been working on that, and it's really interesting. I think it's really sets Shanta apart as a junior miner. The amount of disclosure. I've already referenced the high grade or the spectacular gold that we've seen coming out of the recent drilling at West Kenya, and we'll have an update out on that in April or May. I suspect it'll be more likely April than May. So that's something to look forward to. In Q2, around April 26th, I think it is, give or take a day or so, we'll have our Q1 operating results, and we'll give you a flavor for how the progress is going at the Crown Pillar. So this will really, turbocharge the next 3 quarters of gold production for us and into 2023. And suffice to say, we accessed the Crown Pillar on February 24th, and I could characterize it as either on track or ahead of schedule for starting to pull ore out of the Crown Pillar. We initially said sometime in May, and hopefully we'll be able to be more specific with that update on April 26th. The feasibility study work at West Kenya commences on May 1st, when a very qualified individual will be joining us at the West Kenya project. And we expect that to last for about 15 months. We're aiming to publish the feasibility study in sometime, I would say, the end of Q3 2023, and then get on with permitting, construction, and ultimately production at West Kenya. Our 2021 audit results are due out in early May, and we'll talk a bit about in those results how we're continuing to return capital to shareholders. And then, of course, the Singida project is moving along on track, and we'll have an update out on that before the end of the second quarter. So nothing more to say on that at this time. Now, the big line at the bottom, of course, is the VAT update. Remember, in the back of your mind, just keep that seed planted that there's $23 million of VAT, historical VAT that is due we believe is rightly ours. We are actively pursuing that. We have a fully incentivized team on the ground who's helping with that and making progress every day. And on regular VAT updates, I can report that since July 2020, the VAT refund situation is normalized. And just in fact, today we had some small amount of cash returned to us and an offset on our 2021 taxes of VAT. So that process is in good order, and no concerns over that. With that, Zach will end the formal part of the call and open up to any Q&A.
That's perfect. Thank you very much for your presentation. Eric, I'm just going to bring your camera back up. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be accessed via your investor dashboard. Eric, as you can see, we've received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. If possible, please could I just ask that you read out the question and give a response where it's appropriate to do so, and I'll pick up from you at the end.
That's great. Thanks. So our first question, Zach, today comes from Mark. He said, great progress. Do you think there's a need for future capital raise to accelerate the business? I've said this categorically, if someone's worried about an equity raise, we have strong cash flows at a very attractive gold price and an unlevered balance sheet. So, and then we also have full flexibility over our growth plans. So the short answer is no. I don't have any plans to raise equity capital, and we have a lot of levers to use if we so need to. So that's hopefully that puts that question to bed. Ramon has asked, are COVID and inflation having much of an impact on Shanta's operations and costs? Good question. We've been living with COVID now for 2 years, probably longer than that. I was on site recently with someone external to Shanta who's there with me and very interested, an investor. And the question I got was, why do we keep wearing masks outside? And my view was, well, that's the policy, that's the protocol we've adopted. It is what it is. And so I would like to probably thank our employees for being so supportive with the rules we've put in place. Health and safety is key to us, and it really is no shortcuts allowed at Shanta. So we've lived with COVID for 2 years. We've done incredibly well to get through that period, and we'll continue to be careful around it. Vaccination levels are relatively low in Tanzania, and but that's just, I guess, the nature of that area. Now, the second part of that question was about inflation. Listen, if someone tells you there isn't inflation in the world right now, I'm not sure. I'm not sure where their evidence comes from that. There's inflation, and what I think the key thing to look at with Shanta is what are the components of our cost base. One of our largest portions of our cost is labor. I think it's about, from memory, about $12 million a year, about $1 million a month. And we've seen some pressure on that in country, but obviously we pay a lot of our employees in local currency. So, local inflation is made up through currency depreciation. So it's, what we're trying to do is be fair to our employees. When we look at consumables, of course, there's inflation. You'll see it in things like, fertilizers, which go into explosives, oil. But we've now 25% of our power is on the grid. But of course, the gold price has gone up, and so it's, you'd like to think that these are kind of offsetting, or actually we're better off with a higher gold price. But every gold company in the world has inflation. Every company in the world has inflation. I'd love to know a company that doesn't experience inflation right now, and I'm sure you're seeing it in your day-to-day lives. So yes, there's inflation, but I would probably say it's somewhere between 0 and 5% on our cost base. I don't have any other questions. So with that, I'll just say a couple of closing remarks. I appreciate all the time our audience gives us. I thank you for being supportive and look to continue to provide updates as and when appropriate. So thank you very much, everyone, and be in touch.
Eric, that's perfect. Thank you for updating investors today. Can I please ask investors not to close this session, as you now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. It will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of SHANTA Limited, we'd like to thank you for attending today's presentation, and good afternoon to you all.